Welcome back. I hope you're having a fantastic day. Is Bitcoin, our cryptocurrency markets, and the stock market trying to fake everybody out and pull the wool over everybody's eyes? Here's Bitcoin on the hourly. And yesterday we had this little drop on the news that Russia had invaded Ukraine and troops started entering Ukraine. And then today it's been uphill, had a nice little bounce, a little bit of a raggedy bounce here, but still a decent bounce nonetheless off the lows to the wick high of about 8%. Not a bad move for Bitcoin. Ethereum had a similar bounce, but some of the other altcoins did a little bit better, as they often do. This is Avalanche, had a 22% bounce. Solana had a nice little bounce here of about 15%. Matic, Cardano, crypto.com, Aave. So the theme is the same across the board. The question is, now that we've had this reversal, that we're seeing this little reversal on all the assets, was this just a fake out? Was this a dead cat bounce? Was this a short liquidation or long liquidation? Short liquidation. Now we're liquidating longs again with people trying to trade both sides of the market and leverage up. Could very well be. Could also be the announcement today that Russia is now in a position for a full-scale attack on all sides and could be imminent within 24, 48 hours. So we just don't know what the situation is going to be. Markets were up this morning. The futures were up after yesterday's sell-off. Remember, I said the key is the momentum into the close. Do you have buying momentum into the close or selling momentum in the close? Is the market up or down and into the close? That's what's important. Market openings can be deceiving, but generally what happens is if markets are up or down in the morning, they pull back around the afternoon like they did yesterday. And then the real direction of the market, the real indication from investors and what they're thinking, is the momentum into the close. And as we saw yesterday, the momentum was down into the close for crypto assets as well as the stock market. So we just need to watch today. It is February 23rd of 2022, and it's about 2:19 Eastern Standard Time. So right now, markets, the Dow is down 210 points, 0.63%. The S&P is down 38 points, 0.89%. NASDAQ is still taking the biggest hit, down 1.75, 175 points, 1.3%. So it's on the lows of the day right now, I believe, and we'll have to see how that velocity is maintained throughout the day. Bitcoin is down on its lows of the day as well. Let's take a look at Bitcoin on the daily, and we have yet to put in that higher low that we're looking for this 36,500, 35, I guess that's 35.5, $35,000 bottom to be confirmed, for this to be the second lower high here or higher low here for continuation into that retracement that we're looking for. But again, with the Russia situation, that kind of threw a wrench in things. All bets are off. So nothing is really holding up like we were looking for, with that little caveat in the game. Not really a black swan, but just kind of a little roadblock or hump in the road, if you will, in terms of the progression that Bitcoin was probably looking to make right here with this onward journey into somewhat of a retracement, kind of like what we saw back in 2017, 2018, where Bitcoin had the big sell-off top, had the rebound, and then onward. And I think what we could potentially be looking at is this little area right here looks very similar to where we are right now. If you take this little fractal here and kind of copy that, and then put it over here next to where Bitcoin is at the moment, it kind of starts to look a little bit familiar in terms of this little range right here. Let's pull this little piece up and see if we can pull that into place of where we're at right now and kind of fit it down right here. And it starts to look like that could potentially be a little bit of what's happening right here if we stretch this out a little bit. So it looks like that little fractal could be very well playing out in terms of the price action that we're seeing right now. So nothing fits perfectly or exactly, but that's kind of the fractal that we've been following. from 2019, 2017, 2018. You can see the price action kind of lines up there, kind of gives you an indication of what happens. And it went into this final capitulation move right here. So markets kind of retraced right there, bounced around, a little bit of a retracement there, kept going down into that final capitulation. Then it bounced around the bottom there before it ultimately came up here and then turned around and then continued its journey upward, as we saw back here in this 2018 timeframe into 2019 right in here, where there was a little bit of a drop back into that area where we were looking for the price to continue. So if you look at this 2017, 2018 little fractal, kind of looks like where we could be right now in terms of the price action and what we could potentially expect in terms of price action moving forward. So that's one idea there. Another one that's been put out there, Crypto Savvy. If you watch Crypto Savvy, he's been talking about the Amazon price chart from back in 2000, the .com situation. And if you look at this area here and take this all the way down, and of course that was a big drop, and that occurred in 2000, 2001. That was quite a substantial drop of about 80, 90%, I think it was. Yeah, 94%. So let's take a look at that on the Bitcoin chart. And let's see what we have here. We go back to my chart here for Bitcoin, so we can take a look at that real quick and put that in there, see what it looks like. And let's paste that on. And this gets kind of interesting when you do these little fractals and kind of throw them in there, but that price action somewhat lines up as well, depending on how you stretch it out and what you do. And this one gets really interesting if you line that up. And like I said, Crypto Savvy has been kind of following that price action, and that kind of shows you what a comparison of the Amazon chart back in 2000, 2001 looks like compared to what Bitcoin's doing right now. And that one falls way off the cliff. Obviously that's not any area where I think Bitcoin could go, but you see it could potentially retrace, if it follows this pattern, and how they follow these patterns, retracing that move as well. So those are some of the things and some of the theories that are on the table right now. And of course, the Russia-Ukraine situation is going to lead the news, as well as the Fed, in terms of what they're going to do. It's up and down. Every day is different. Some days people are expecting the Fed come out strong. Now the news is that the market has adjusted its view of how the Federal Reserve will raise interest rates. So now they're expecting to start raising rates next month and not slow down until well into 2023. As we know, inflation is on the rise. This situation we're in now is just going to add to that and put fuel on the fire. So what the market is expecting is 25% basis points, 25 basis points, 0.25% of a rate increase. And pretty much each meeting, that's what the market is expecting the Fed to do, which is creating the great repricing of the risk assets in the world. And we're seeing that in the stock markets with a lot of the stocks that we've been talking about, with the FANG stocks, tech stocks. The NASDAQ has taken a beating. NASDAQ is in correction territory now. It took out this previous low and is continuing down into deeper correction territory. NASDAQ now is down 18%, almost 19%. The Dow has taken out its previous low into correction territory. Excuse me. So has the S&P. So these are the things that, excuse me, still have this cold I'm dealing with that's kind of messing my throat up. But these are the things that I am looking at, keeping an eye on right now. What else is out there on the horizon with interest rates that we have to watch? The real estate market, rising interest rates have created a demand drop in the real estate housing market. Mortgage applications have dropped to record lows. They're down about 13% as rates have gotten up into the 4% range. And that's kind of been my theory, is that once we get into the 4% range, you will see demand cool off in the housing market. If we get up to 5%, you'll start to see a big significant change in the housing market and buyer activity. Prices will adjust and they will come back down. And housing prices and interest rates are not going down anytime soon. It's going to take a while for housing prices to adjust to rising rates. Generally, it's going to lag by about 6 months. So as rates get up into the fours, the mid fours, into the low fives, that's when you'll start to see housing prices really start to adjust. Buyers will really pull back because a 0.5 point to a 1% increase in interest rates really affects the amount of house that borrowers can buy in the market. So something to keep an eye on: interest rates, inflation, the Fed meeting coming up in March, which is a couple of weeks away now. We will get the next inflation CPI print before the next Fed meeting. So the Fed will have the latest inflation information. We'll probably know what's going on with Russia and Ukraine at that point, whether the situation has escalated or if it's de-escalated and they've negotiated a ceasefire and a truce. Hopefully they can get that done. And until we get to that point, we just need to navigate these choppy waters and anticipate anything and everything, and just kind of watch for these trappy situations, longs getting taken out, shorts getting taken out, and trade the ranges. So that's where it's at. If you're a long-term holder, then you just hang on and wait for the markets to rebound. The good news is that Bitcoin seems to be holding up well, considering all of the headwinds out there and all of the pressure on that asset right now. So it's a very good sign if Bitcoin can continue to hold these levels. That'll be a great sign for the asset for the long term. So these are the things I'm looking at and thinking about. I hope this video helps you. I will see you on the next video.